Do you know that choosing an investment tool suitable for the personality of investors gives 47% more profit? Okay, this was a joke, but if investors invest according to their age, knowledge, and risk perception, it helps the person stay psychologically proper and stable. Of course, instead of investing in crypto without knowing it just because crypto earns a lot, they can avoid possible losses and make profit by choosing the investment instrument that suits them. There are many different investment tools. If a person has little knowledge about investment and is afraid that their money will go away, it may be more useful to choose investment tools with a lower risk rate. But if they say no problem, even if they lose half of their money, they can prefer riskier but more profitable investment tools. They need to have good knowledge about those investment tools. Today we will examine gold, the stock market, and crypto as investment tools. I am Yorla, so let's get started. Gold has been an investment tool that people see as a safe haven for centuries. Throughout history, during economic crises, wars, and periods of inflation, investors have tried to protect their money by investing in gold. For example, in 2000, 1 ounce of gold was about $280. In 2020, during the pandemic, this price went over $2,000, currently around $3,600, which means gold gained approximately 600% in value over 20 years. This is quite an impressive return in the long term. The biggest advantage of gold is that it acts as a safe haven during economic uncertainty. While stock markets fall in financial crises, gold often keeps its value or even increases. For example, during the 2008 global crisis, the US stock market lost 37% of its value, while gold kept its value and even had a small increase. That is why risk-averse investors always include gold in their portfolios. Gold also protects against inflation. In 2022, while inflation rates were high worldwide, gold prices reached record levels. This shows that gold is an important tool to protect the purchasing power of money. By including gold in their portfolios, investors can both reduce risks and gain value during crisis periods. However, gold has some disadvantages. First, gold does not produce income. Stocks can pay dividends, companies can grow, but gold only gains or loses value. Also, its price can fluctuate in the short term and sometimes stay flat for years. For example, between 2012 and 2018, gold prices did not change much, testing investors' patience. In short, gold provides security and crisis protection for investors, but it is hard to match the stock market's returns in the long term. If you want to protect your money from economic uncertainty, gold can be a good option. But remember, gold should be only a part of your portfolio. It is not expected to provide large profits on its own. Also, it is important to note that gold is not like cash, and selling it quickly in urgent situations can sometimes be difficult. Now, let's move to the stock market. Let's be honest, the stock market is both exciting and a little scary. But with the right approach, it is one of the strongest areas where you can really grow your money. For example, the S&P 500 index in the US gives an average annual return of 10%. Imagine, if you had invested $1,000 in 1980, today this investment would be almost $100,000. Yes, it sounds amazing, but it is all about patience and time. The stock market has ups and downs in the short term, but in the long term, patient investors win. The stock market is like a roller coaster. During the 2008 financial crisis, the S&P 500 lost 37% in 1 year, and in 2020, during the pandemic, it fell 34% in just a few weeks. These kinds of fluctuations can make people panic at first, even thinking, "Am I doing something wrong?" But the key is to stay calm and see the long term. Quick panic selling often leads to big losses. There is also the issue of dividends. Some companies in the stock market regularly give a part of their profit to investors. This means you do not only have to wait for the stock price to increase, you also get a regular cash flow. These small dividends can make a big difference over the years and give a visible sense of profit. The key in the stock market is strategy and research. It is not enough to just say, "The price is low, I will buy." You need to look at the company's future, its industry, management team, and general economic trends. Also, it is very important to diversify your portfolio. Putting all your money into one stock is a big risk. For example, in 2000, people who invested heavily in tech stocks faced serious losses in 2001. But a diversified portfolio can balance declines and provide long-term gains. Another advantage of the stock market is that it teaches you how to invest. You do research when choosing stocks, follow the news, and learn market psychology. This process not only grows your money, but also improves your financial intelligence. So, the stock market offers both profit and learning opportunities. In short, the stock market is an excellent tool to grow your money in the long term. Do not let fluctuations scare you. The important thing is to be patient, do research, and act strategically. If you manage your money wisely, the stock market will give you not only profit, but also the excitement of investing, and the doors to financial freedom. Now it's time for cryptocurrencies. The crypto world offers a completely different experience from stocks and gold. There are incredible opportunities, but also serious fluctuations. Let's look at Bitcoin. In 2010, one Bitcoin was worth almost $0.003. In 2021, its price went over $60,000. Some people's $100 investments became millions. Of course, it is not always that easy. There are also serious risks. One of the biggest advantages of cryptocurrencies is their high return potential. Compared to other investment tools, you can make huge profits in a short time. For example, Ethereum was around $1 in 2015 and went over $4,000 in 2021. This is an increase of more than 400,000%. But attention is needed here as well. Big gains can also mean big losses. In 2018, Bitcoin fell from $20,000 to $3,000. One day it can rise a lot, and the next day it can drop seriously. Patience and research are essential when investing in cryptocurrencies. Investing without understanding why a coin exists, its technology, and its team often ends in losses. Buying a coin just because it is popular may cause short-term losses, and not provide long-term profit. Also, the crypto market is open 24/7, which means prices change even while you sleep. This can be exciting but also stressful. Another important point is diversification. Putting all your money into one coin is risky. Dividing investments into Bitcoin, Ethereum, and some altcoins reduces risks and increases opportunities. Unlike stocks and gold, crypto requires faster action. But with the right strategy, it offers amazing opportunities. Cryptocurrencies are not just a way to make money. They are also a place where technology and finance meet. While learning blockchain technology, decentralized finance, and new opportunities like NFTs, you also gain investment experience. In this sense, crypto offers both profit and learning. In short, cryptocurrencies have high risk, but also high return potential. Patient and careful investors can achieve big profits with proper research and strategy. However, sudden drops and fluctuations will always happen. Therefore, do not let your emotions control you, and always act according to a plan. Now let's summarize briefly. Gold provides a safe haven and protection against inflation during crises, but it is hard to match the stock market's return in the long term. The stock market is a great tool to grow your money over time with patience, but fluctuations can be a little exciting and stressful. Cryptocurrencies have the highest return potential, but are also the riskiest investment. Sudden drops, rapid price changes, and the 24/7 market offer both opportunities and stress. The important point is this: no investment tool is perfect alone. Strategically combining gold, the stock market, and crypto can reduce risks and increase opportunities. Create a plan that suits you and do not rush. So, if it were you, where would you invest your money? Gold, the stock market, or crypto? Don't forget to share your opinion in the comments. If you liked the video, make sure to subscribe and turn on notifications. This way, you won't miss the next investment guide.